Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, October 17th, 2018. In this video, I want to take a deep dive into the semiconductor sector. I like to do that from time to time when I see a sector that stands out. And what we'll do here is we'll look at the charts of the three main semiconductor ETFs. That's SOXX, XSD, and SMH. They all track different baskets or indexes. This one's been around forever. This is the SOXX Semiconductor Index. It tracks the Philips SOXX Semiconductor Index, and that one's been around for decades. I believe it was the original one. I've been tracking that one for years. And I also like this. It's my go-to ETF when trading the semis because it also, if you want to use leverage, they have SOXS and XOXL, the 3x short and 3x long semiconductor ETFs, and they track the same index. So if I'm trading those long term, I don't look at those charts. I pay attention to this chart, even if I'll use those as a proxy. And I'll just say this: if you're new to the site, I go to the FAQ page under ETF related questions. I talk about the decay. There's a question in there that talks about the decay in these ETFs, and typically they are not good. They're horrible long-term holds. But if you get in at the right time, you can vastly outperform this sector by more than 300%. So if you get in SOXS and we have a pretty swift move down, you can again return better than 3 times the underlying sector. And the math is all explained in the reasoning behind that on the FAQ page under ETF related questions. All right, so what do I see when I look at this chart? What stands out to me is well, first of all, this level, and it's highlighted in purple, 164.58, give or take. Very significant support level. That I can tell you. We've had a lot of reactions there. We almost kissed it the other day. So this is the level I'm watching. And overall, this looks like a big basing pattern or topping pattern. Not basing, of course, a topping pattern. Basing pattern would be at the bottom. You can see here we've had now it's about a year-long sideways trading range. And so it appears to me that the semis are topping. Now, one could argue that this is just a consolidation. We're going to break out, and certainly we'll watch that. If that starts to develop, some of these divergences burn through. But that is not my opinion as of this time. It's not my read on the charts, and I'll explain that here as I go through the daily charts and the weekly charts. And I'll also say this, my job is to show you what I see in the charts, what I believe might happen, I'll give you my take, and ultimately it's your job to decide whether you agree with that analysis or not. So there's also about a midpoint there in the channel. That's all I was trying to draw. And let's go back to that chart I was just on. So where we're at right now, and again, I'm a little on the fence right now about where the market's going to head from here since we defended those long-term weekly supports. But I'm looking at a possible shorting up right here. This line, let me give you the level. I should have that turned on. 175.65, give or take, there is a resistance level. It acted as support right here. There's a couple reactions here and here. So we could fail there, and at best case, and I'm watching the markets, I may pull the trigger on this one soon. If not, a bounce up here, come in, we have another horizontal price resistance level there, and we have this uptrend line that we recently broke down from. So this may provide us an objective short, and I believe that the next time we visit this level, if we do again anytime soon, it will break or very soon. You can only tap on a level so many times. The more you tap on it, the more likely that level is to break. So that would be one possible scenario. I'd see a quick move down here to about 150, 150, and probably come down here to at least that 139.50-ish level before all is said and done. So that's the daily chart. That's how it looks. And we've had these series of divergent highs, and they do play out. They've each have played out. You can see 10% drop, 14%, 17. I think we had a active official short trade on the site earlier this year, and I think it was right here at this one, and we swung it down and covered there on the lows and sidestepped that big bounce back up to the top of the range. But this time around, I'm not looking for a push all the way up. If we get it and I haven't shorted it by then, yeah, maybe that'll be the entry. But I wanted to let you know, somewhere in here is what I'm really looking at, but I've got to watch the market. I need to see the market really show me that it's out of gas here, that yesterday was just a short covering rally. So I'm watching the highs today on QQQ and SPY to see how the market acts. So I want to get this out to you first, and again, I will put my favorites up on the front page. I had somebody suggest that yesterday. I asked for that feedback in the video on one of the trade idea videos I did. Oh yeah, the gold stocks, and yeah, the suggestion was to put up a couple of my favorites, whether they're official or unofficial, and I'll do that here. And I'm going to go through it in this video as well. So there it is. That's what I think will happen to SOXX, and we look at a weekly chart. This really goes into determining my analysis. If you're new to these videos or new to at least the analysis on semiconductors, a semiconductor sector, like all sectors, works in cycles. You have booms and busts, and what happens is the corrections are usually pretty sharp and severe, as are the rallies are very strong too. But you can see these drops here. They're all in their own bear markets, technically speaking, to drop of 20% or more off the highs. But I consider these, because of the volatile nature and the big moves in the semis, these are really just corrections, if you will, within a bull market so far. So the smallest one there was about 18%. It was about almost a 30%. So here's where we're at right now. We have a very well-defined trend line that was broken earlier in the year, broken and back tested. Here, I'll zoom in for you a little bit. So you can see it was broken, back tested, and we've since rolled over. But unlike a lot of breakdowns and back tests that then result in immediate selling or very soon after, we moved in a sideways range as I showed you on the daily. But I also have this uptrend line right here. Really, these two lines form a symmetrical triangle pattern right there on the weekly. And we had an impulsive breakdown below it yesterday. We are well below. There's that 40-week moving average, which has come in and defined this uptrend all the way going back to 2016, since we really embarked on this last leg up in the semis. And that is clearly in the rearview mirror now, unlike the major indexes. So the semis, I think, are done and are probably heading lower, but the broad market to an extent is holding them up. And there's a few individual setups. In fact, I have a list of longs. I told you the other day I have a ton of watch list names. I poured over the charts again this weekend, and a bunch of the long setups, not a bunch, but several were actually semiconductors. I'm going to get to those in a minute here. So for those of you who are bullish on either the markets or the semis or looking for long trade ideas, you're going to get a few in this video. All right, so there's SOXX. Let's just look at the long term of the other two. This is XSD. That's the Spiders S&P Semiconductor ETF. Same thing, trend lines, divergent highs. I didn't measure out all the corrections, but you can see them when you see these the trend lines on top. Those are divergence lines showing you negative divergence on the indicators. And so the semis, this particular one broke down and has worked its way up within this wedge pattern right here, these two lines, and then boom, a couple weeks ago, an impulsive breakdown, follow through selling to confirm that breakdown, and today just seems to be a kickback oversold rally, largely in sympathy with the broad market. And the other one is SMH VanEck Vectors Semiconductor ETF. There was your last trend and bull trend in the semis, big correction again. A pretty big drop down from about $60 all the way to about 43. Set itself up in another uptrend. This is my preferred trend line. This is my benefit of the doubt trend line. I'll change it yellow so you can see behind it is that 200-day or 40-week moving average. And you can see, so it broke down. And on this particular one, look how well that semis or SMH danced along that 40-week moving average, which is the same as a 200-day. But look at these weekly candles and then boom, breakdown. But that in itself, although it might have been a sell signal in some people's book, I look at anytime I see security that has a support level, like right here, we had a trend line broke, but we also have this 96.31 support level, and that's a pretty significant level. So therefore, it's not wise to short that break because then you're going, which as we did, catch support on just below that level. In other words, not enough meat on the bone. So you can see a lot of reactions to finding that level. So what we need to see go on this one with conviction, ideally on a weekly close or a big red intra-week candle that looks like it has no chance of closing back up by the end of day Friday, is a break below 96.31. Call it 96 to be safe now. And there's 88 would be my first target down there. So that's a pretty decent drop. Doesn't look like much here on this weekly, but that'd be about a 9% drop. And there's certainly the potential for more in the charts. All right, now we're going to drill down to the individual components. That was SOXX again. And let's go down to the daily chart. and I'll just whip through these as quick as possible. Intel I've highlighted quite a bit in recent weeks, and even all year. I pointed out this divergent high and bearish rising wedge pattern earlier in the year. It broke down. This was, leading semiconductor stock, and it corrected, had a nice correction, and the technicals played out. You can see that's roughly the measured target. Take the widest part of the wedge there on Intel, which is that. Add it to where it breaks down. We hit that 47.75 target on the wedge. And actually, we're well beyond that measured target now. But it has since set up in this bullish falling wedge here. Broke out, back tested, had a little rally, came back down, back tested again recently, and it had divergent low. Now, way back when I did this video, or I'm sorry, when I started highlighting that wedge, I had predicted a drop of 24% down to this level here, followed by a rally, and then another drop leg down with a secondary target. This was my preferred target, but a possible 32% drop. We already dropped 24% off the highs. I mentioned that in a recent video. Intel's below the 40-week, and it still hasn't hit this level. Although I just pointed out the bullish falling wedge and the breakout on the daily chart, when you see a key support level like this, very well defined, all these reactions back here, usually acts as a magnet, and the stock's usually going to hit it. That's my experience, and that's why I'm not taking this long right here. But I can tell you this, if I'm wrong, maybe we come in close. We don't have to hit that support. Here you can see it on the daily. And you think the market's going higher, semis are going higher, this one looks about as good as anything. It's back tested a couple times, but I keep talking about what I've noticed in this and some other key stocks is a failure to launch. We've had this bullish falling wedge, in the bull market of yesteryear. If we're still in that bull market, you get the bullish falling wedge with divergences on the daily time frame on a beloved stock like Intel. Usually you get an explosive rally. So far, this has been lackluster, and all the bounces, the initial breakout, the subsequent back test and rally, and this so far, they've all gotten sold into. So we're not seeing this wedge play out the way it should. This is how a wedge should play out. Breakdown, boom, impulsive leg down. Counter trend bounce, boom, continue on down. And we don't have just one wave down. I mentioned that in the stock market. That's why I think there may be more downside to come in the broad markets and some other stocks out there that I'm watching. All right, enough time spent on Intel, and I showed you the weekly. And again, this kind of puts into perspective, if you're new to trading or investing, or you're new to short selling, I love short selling because stocks tend to fall a lot faster than they rise, and you can make in short order, double-digit gains that often take months to make, or even years you can make in just weeks being short. And you saw that recently with the stock market drop. All right, next one up. And I'm going through these, by the way, guys, in order of market cap, descending order. Intel is a $207 billion company. Next up here is Taiwan Semi at about 193. I'm doing that because these larger names will have a bigger weighting on the index. So kind of factor that into your analysis. When I get down towards the end and you have these companies that are, much smaller, I don't know if there's any small caps per se in this ETF. I'll have to check when I get down there, but just keep in mind they're not going to have as big of an impact. And there also may be some trading ops. The smaller companies tend to not get dragged down in the broad-based selling as much as the large companies. That's what happened in this last sell-off. When they sell the Qs, guess what gets sold the most? Intel, Apple, Amazon, Facebook, all the big leading names, because that's what it's chock full of. And so when QQQ gets hit with redemptions, they have to sell what they have proportionally. They have more Apple than anything else. So that's what happens there. TSM, Taiwan Semi, well, you can see this one's long in its own bear market. It topped back here in early 2018, like a lot of semis. Set up there, you had a bullish falling wedge. That one was a real deal. You can see my divergences, breakout, and it's set up in this bearish rising wedge. If I'm talking too fast, I'll try to slow it down here. I try to get through these. I have so many charts I want to cover here, and hopefully I can get all 30. If not, I'll stop the video short, keep the time manageable. But there it is. So a breakdown of a bearish rising wedge that was confirmed with negative divergence, which I like to see. An impulsive move down. And again, most corrections don't end with one impulsive leg down. At minimum, you usually get an ABC corrective wave. And so what I'm looking at now is an impulsive move down, setting up to what appears to be a bearish pennant. So if Taiwan Semi breaks that pennant, the measured move would be, and I know you guys have heard these terms a lot recently, bearish bear flags and bear pennants would be all the way down here to right about that 34, 37 level, and I think that's I'll highlight it right now. That is a my preferred swing target. I always go by if this measured target, which it does, if I put that flag right where the flagpole where it needs to be, it measures a little below. I'd be covering right below there, above there. I'm sorry, 34, 37, maybe even above that reaction low right there. You can put a line, see this one here, but that's it. That's where I think Taiwan Semi is going. Of course, it'll take most likely the broad market, but it definitely helped to see the sector cooperate. And we look at a weekly chart. I know it's going to take more time to flip over to these weekly charts, but this again paints a bigger picture, and I cannot impress this enough. These near-term squiggles and bounces can be hard to call, but when you get negative divergence, oh, what I have here, I'm sorry, that's not yet divergence. We had divergence right here. This is a scenario. That's why I had those lines light color right there. I should have lightened that one. If we happen to get another kick up here, and that's certainly a possibility. Another kick up, that would put in a much larger divergent high and set the stage for a much larger drop. But so far, this one topped early in the year and has, making a series of lower highs and so far lower lows. If we take out that recent low, that'll help confirm that we're in a new downtrend, because that's what a downtrend is. Uptrends are when securities are making a series of higher lows and higher highs. That's it. All right, next one up, NVIDIA. Oh, NVIDIA looks good. This one, the chip maker, GPU makers, the graphic processing units, have just gotten way ahead of themselves. AMD, NVIDIA, and you can see this uptrend line. It broke, but when we set up in this wedge here, and you have this uptrend line right here on the wedge, you have the 40-week moving average, both of which are now, well, we're right on there. We stick saved it last week, meaning we closed back above there with that candlestick body after an intra-week break. So far this week, we're dipping below there, but we also broke this trend line. I would put a higher weighting on the trend line, but you want to see that 40-week go. But I definitely put a higher weighting on the trend line, and I might add this one. This is one of my favorites. Also, when I look at the daily chart, which I just flipped over to, divergent high, same thing. This is that same pattern I showed you on the weekly, that wedge type pattern. Look how well defined this trend line is. Comes back all year. It goes back to December of 2017, so it's a year-long trend line. Breakdown impulsive, and now we're bear flagging just below there. So if this one plays out, what you want to see with a bear flag pattern, like any chart pattern, it's a trade setup. You're consolidating in there. What your sell signal is a breakdown below the pattern, and ideally you want to see it on impulsive volume, because when bear flags play out, what you typically see is you have a move equal to the flagpole, the move leading down to the flag, and just as impulsive coming out on the backside of it. And I've seen these things play out so many times over the years that it's uncanny. They don't always play out. Sometimes you get a little false break. They go halfway. Nothing is 100% in trading, but it's something to look for, and it aligns with everything else. That's sort of the point I'm trying to make here. It aligns with the fact we just broke down, got a little oversold, the markets hit support, NVIDIA hit support here. There's a key level at 216 it needs to take out, but longer term, I mean, if you're looking, try to play these weekly charts, you should be able to tuck these things away. If you get a good entry price, let it ride, because I'm not trading off the 60-minute charts here. I'm not even trading off the daily so much. I'm using the daily and 60s to hone down my entries. But when I have a trade set up that's bullish or bearish on the weekly, I'm looking for a major trend change and a trade that should last many months and produce well into the double digits as far as percentage gains. So therefore, if you get a good entry, you get profitable, either set a stop at break even or trail it down from time to time and let your winners run. That's trading 101. Sometimes we forget to do that. I forget to do that myself, getting wrapped up as an active trader. But you have to define your time horizon on a trade, differentiate a swing or a trend trade, a longer term swing trade, from that of a short-term, counter trend bounce trade you're trying to make that might only last a day or two. And this is TXN. I don't have much of an opinion here. You can see some levels there. TXN on the weekly has broken down. This is also, as you know, a leading semiconductor, Texas Instruments. Nice uptrend line on the weekly, divergent high, breakdown now below the 40-week moving average, but we have support at 98.30. So there's our magic number. Want to see that go. We're in very close proximity to it. Hasn't gone yet, and therefore my hesitation on shorting the sector, because there's some key names still holding above support. Although I think those support levels will go. Until they do, you don't want to get in too early. Sometimes these counter trend bounces can be pretty powerful. AVGO, Broadcom, 227-ish as a support level. It was briefly taken out, back tested. We regained it, so we need to take it out again. That's your next sell signal under there. Again, this is a weekly chart. I look at these indicators down here. I didn't make mention. That looks pretty bearish to me. When the PPO 9 EMA, the signal line, is above zero, that's the white line, the trend is bullish, as it was this entire time. It said, get in, stay long, the trend's bullish. When that PPO signal line goes below the zero, the dotted line, the trend is then bearish. Sometimes you get a whipsaw signal, but this one's been bearish for a while, confirming so far that the trend is down. So that this one you didn't have any type of sell signal. This was a sideways trading range. I always say this: avoid using momentum indicators, things, moving averages when you're in a trading range. You'll get chopped to pieces. They don't work. They work during trending markets. Same with a downtrend. And so far we had a strong uptrend, and this told us the trend changed right here. Tried to draw an arrow, I botched that. As this breakdown said, be on alert, we just broke down. And so there it is. We need a couple more check boxes, 227 to go. And then we have support here at 177. I would expect a reaction off that level, but once that goes, that opens the door for even more downside. All right, guys, I just looked at the clock. I'm 21 minutes into this, so what I'm going to do is skip. I'll just highlight those that I see a little bit more in the charts, and I'll try to, like I said, do something for the bulls and the bears. This one was on my watch list recently as a long, kind of jumped up the last couple days, and train has left the station. I was going to point it out here over the weekend when I went over the charts, added this one as well as a few others. It had fallen to support. I have support right here. You can see all those reactions, and we had what I love to see, positive divergence on the daily time frame. Just as we had negative divergence here at the high, negative divergence at this high, and so far that was good for a bounce of, again, the train's left the station, but about 10-11%. However, it's coming up to resistance. I wouldn't chase this one here. In fact, if anything, I'd short it for a pullback. I think if it's going to ultimately go on to breakout, I think it comes back down within the wedge. So maybe a short-term shorting up, but I wouldn't go get crazy short on it right now unless we see this level go with conviction. Now, this is where, and this is interesting because I showed you the bullish developments on the daily charts, and I said this before, in a bull market, short pattern, bearish chart setups have a higher failure rate. They don't play out as often, or if they start to play out, they tend to fail or fall short of their projected targets. In the case of a bear market, the opposite happens. So what we're looking at here, these are bearish developments. This is a divergent high. We've had that correction. It's brought us down to the secondary trend line. If this breaks, you can see the moving average, a 200-day moving average rolling over. Another way to use that, 40-week moving average on a weekly chart. Another way to use that is look at the slope of the 40-week. When the slope is positive, meaning the line's pointed up, the trend is bullish. Once the slope goes negative, it turns down, the trend is bearish. So that's another way to use a moving average. Some people use them with other moving averages to look for crossovers. So what I'm getting at here is that bullish chart pattern on the daily may have played out, and if we break here on the weekly chart, we can go down quite a bit more. So that's ASML. Micron I wanted to cover. Here's another one I predicted back here at the top, a 28% drop, and it looks like we got that and then some. That would have been my last video. I think there should be a link to that video. Probably it'll show up under this video in the related posts. There's the site should automatically tie in related posts together. You can watch that video if you want. So there it is, divergent. These divergences working, just like we had a divergent high here. And Micron is a cyclical little sucker. Back then, that last divergent, or back in 2011 divergent high, 67% drop. I would be glad to take half of that. And if you get a short trade and you stick with the charts and let it run and look for the optimal exit points, support, divergences, other things, the sector coming up to support, you can milk a good part of that run. 74% drop. And what I called for back here before it even topped, or right around that time, 28% drop, and maybe even a 60% drop down to T2. That's my second target zone. So we're already at the first target zone. And I also mentioned this one recently is coming down to hitting this. These were the targets I laid out on the daily chart. T1 was hit here, T2 was hit right here, and then T3 was hit right here. So it's a matter of this stock falling to support, but I do have a fourth and final target here around 26.11, but you need to see $40 break, and that is Micron. AMAT, I just want to show this one, not that it's a trade idea. Very oversold. It bounced, it hit support here, but this is one of the chip equipment makers. These are the canary in the coal mines for the semiconductors because they make the equipment that Intel and Texas Instrument buys, to make chips or some of the equipment. And so and also a cyclical sucker. So these guys, AMAT, KLAC, 10 core, they usually top before the sector because when orders to them start slowing, that's Intel, those in the know, the insiders saying, okay, we see business conditions, demands for chips slowing, we're going to slow down. And so you can see this sucker trades well to the technicals. There was a nice, clean, bearish rising wedge back there, broken 2015, one heck of a correction. Another big divergent high, trend line break, and so far, boom. So I wouldn't short this one here. It's very oversold, not enough meat on the bone. I'm pointing it out to say that it reaffirms my belief that the semiconductor sector has peaked and is most likely going to be heading lower as the rest of the chip stocks follow. ADI, analog devices, there was this 8656 is a pretty decent support level. This was a breakdown here, breakdown back test. It was a divergent high, everything I like to see, but it's back testing. It overshot that 8656 level, and it's a pretty decent resistance level. So you could take a shot here. That could also be flagging. This could be a little bear flag action, and that could take us down here. It'd probably take us below that $80 target, down somewhere at about that 78 level if that one plays out. And a quick glance at the weekly says this one's probably done. There's a bearish rising wedge, breakdown, impulsive, right to 83.90-ish support. If that goes, 76 or so there, and maybe some more to come. AMD, oh yeah, here's another one. I mean, just a history of big, look at these rips and dips, and if you have underestimate how much this stock can fall or rise during corrections, that's a 96% drop. There's a 93% drop followed by a 100 or 1200% run. So this one can move. And again, this shows you the cyclical nature of the chip industry and the profit cycle for these companies. So there it is. Almost divergence, stretching the upper limits of the divergence on the daily. So the weekly chart doesn't show me a lot, but here's what I'm looking at on the daily. We have this uptrend line. We had a sharp rising wedge, correction down to that trend line. So this trend line needs to go, and this stock looks very thin. I don't see a lot of support down to really all the way about this level, call it about 1460 or so, although there is some support there as well. So for a long-term trade, I need to hone down an entry on this one, and it's on watch for potential setup. I think I even had it as a trade idea recently. This was one of my favorites over the weekend for long side, LRCX, Lam Research. Just a beautiful, clean, bullish falling wedge, positive divergence, everything I like to see, and as it fell to support as well. So debated doing that video yesterday, and the market ripped up so high. I figured a lot of the train had left the station on a lot of these, but I'll still try to get a video out there on long trade ideas because this market could certainly bounce for a few more weeks here now that it's held support there on those long-term weekly charts. So there's LRCX on the daily. Here's what the weekly looks like. This stock looks to be it is in a bear market. I mean, if you look how much it's already fallen, 40% or so. And there's that wedge. Like a lot of these semis, these charts to me look similar, very similar. We had trendline breaks, divergent highs, and most of them had a support area they were basing, and it's when that support breaks. So on LRCX, if that bullish falling wedge plays out and we get a kickback rally to about that 165 level, that may provide another short entry for a swing down here, which ultimately, if and when the next bear market gets underway soon, I would easily see this stock coming down to 84.28. I know that sounds like heresy for semiconductor bulls and all that, but again, just pull a monthly chart and just look how much and these are, by the way, these are bull market corrections. Oh no, this is a monthly chart. These are that was a bear market correction, about 90%, bear market correction about 85, but even some of the corrections within a bull market measure well into the double digits. So if we get a bear market correction, I just showed you the last three there, they're all averaging about 70 to 80+%. So look what that would look like here. We'd be down all the way to about $56 or so on LRCX if and when we get that. And that $84 target to me is easy. I can see that happening and get a nice bounce off there, go long, recycle in for the next leg down when the time comes. You know what I'm going to do? There's too many. There's 30 stocks, and again, I think I'm not giving the full picture if I don't show you the weekly charts and the daily charts. Weekly painting the bigger picture, and that's why I did this. So I spent enough time talking about the sector as a whole, the cyclical nature, showing you the 3 different ETFs that you can use, as well as some of the stocks. I didn't get through all of them, so therefore I might have missed some of my favorites, both on the long and short side. And what I'll do is I'll just follow up with a post within either the trading room on the front page, whether they're official, unofficial trades, on what I think are the top picks, both long or shorts in this sector. And again, I may put on a short for swing short on the semis. That would be my next trade. And I don't see going long the sector anytime soon. Doesn't mean it can't go up, but I'd be more interested in shorting the sector. And again, for those of you looking for long trades, I'll share some of the long setups there as well. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoy.